Sama Sejahtera once again. So let us continue our tutorial session. This session we are going to discuss the other two questions from the practice kit. They are question 4, okay, Kasturi Berhad on page 22, and the other one will be on question 5. Okay, let us go through together question 4 first. So as usual, okay, we read the question. Okay, now we have an idea. Okay, what are the information that we need to extract? So this time we have different how to say different appearance of the statement of financial position. So given to us here is the asset, list of asset, and then the equity and liability section. So this information is for 31st December 2003. So under here is the information for 31st December 2004, which rate in our answer. So the requirement here, we are going to prepare the journal entries to record the above transaction. Again, narrations are not required. And to prepare the statement of financial position as at 31st December 2004 for equity and liability section only. So again, okay, what you need to know is that you have to extract the relevant transactions to be recorded in the journal entry. So based on the information number 1, this is regarding the redemption of preference shares, where the company wants to redeem what we call partly. So the company wants to redeem 80,000 of its redeemable preference shares at RM1.50 each. And for the redemption purpose, the company will, okay, the keyword here is that partly finance it by issuing 40,000 units of ordinary shares at RM1.50 per share, and where the shares are fully subscribed and paid for. Okay, and number three, the company sold all its treasury shares in the open market at 64,000. Okay, so very very limited information to be tested here. It's quite easier compared to the previous question, because as we can see here is that we are already learned about the redemption of redeemable preference share, but a new thing that we are going to present here is the is the practice of the treasury shares. Okay, so how many transactions altogether for this question? There are only 2 transactions. Number 1 is regarding the redemption of preference shares, and number 2 regarding the resale of treasury shares. Okay, we go for number 1 first. Okay, in the question, okay, we have a total of 100,000 redeemable preference shares at 300,000 ringgit, where part of it will be redeemed. So how many units to be redeemed? We are going to redeem partly, which is 80,000 units at RM1.50 each. And this redemption will be partly, say the word is partly financed, meaning that there will be another part to be looked into. So what is it? Okay, let us go through together. Okay, first, to record this the redemption of preference shares, you need to write off the shares first. So the first step is debit the redeemable preference shares. How much? 80,000 unit times with RM1.50. So the total is 120,000. Okay, this is for transaction, the first transaction, redemption of preference share. Okay, the next step is you are going to pay the redemption value. Okay, debit redemption of RPS and credit bank, 120,000. Okay, now we are going to replace the amount of shares redeemed. So this is the amount of shares that you have redeemed, which is 120, and we need to replace it. So we are going to replace it by issuing shares. Okay, so it is said that the company will issue 40,000 units of shares at RM1.50. So debit bank, Okay, debit bank 40,000 times 150 cents, so you get 60,000. So debit bank, credit OSA, and then you close the OSA account and transfer to ordinary share capital. Now, you already replaced with 60,000. You still need more, okay, because the amount that you redeemed just now is 120K. So you have made the redemption by issuing of shares of 60K. So you still have balance of how much? 60K, another 60K. So where to top up this value? You are going to take it from your profit, okay? So that is the reason why it said this redemption is to be partly financed, meaning you are not going, you have to use another portion of other method lah. Sebahagian digunakan dengan cara menjual saham, so ada sebahagian lagi. So sebahagiannya adalah out of profit. So the 60,000 balance will be taken from the profit and transferred to OAC. So at the end, okay, is tally is tied up to 120,000. Okay. We're done with the first transaction. The next transaction is regarding treasury share. The company did not buy back its share. Okay, kalau kita lihat the sentence here, the company sold all its treasury share. As we know, we learned that company may repurchase or buy back its share from the open market. But this time, you want to resell. Okay, so meaning that you already bought the share. Okay, you go back to the panel to the software. As you can see here, okay, this equity, okay, consists of ordinary shares, right? But as you can see down here, there is an amount of treasury shares. Okay, where does this amount comes from? So we assume that the company already bought this share in previous time and keep it as a treasury shares. That is the reason why do the item appear in the statement of financial position, because the company already bought this share in the previous time. You can refer to my lecture notes in my videos. I have explained about how do the treasury shares being recorded, okay, once the company bought it from the open market. So these treasury shares is being put apart from the original value, because this share is to be sold, okay, in near future when the market is improved. So now what do the company wants to do is that the company wants to sell these treasury shares. So the carrying value of the treasury shares at this time is 55,800, and in 2004, company want to resell it at 64,000, meaning you want to sell more, okay, than it costs. So of course, here you will have an extra money in your hand. Okay, so how to record it? Okay, remember when you sell the shares, you will get the money, okay? So that is why you debit the bank. So you will receive money. The question is how much? The amount is referring to the question 64,000. So the original cost of the treasury shares is 55,800, meaning you have to credit it back, because in the previous time you debit the account, you debit the account. So this time you have to credit it back, and you can see that there is a difference between these two values. This is the cost and this is the selling price. So you are selling at a greater value. So the difference is called as a profit on resale of treasury shares. So the profit will be transferred to ordinary share capital account. Okay, this is the difference between the sale value 64,000 and the cost value 55,800 ringgit. Okay, so if you ask me why do we need to credit the treasury shares, we have to refer back the notes of treasury shares. As you can see, share buyback have two different methods. Okay, one is by treasury shares, and another one is by cancellation method. So these are the two methods that can be used. Okay, if you refer to the treasury shares, okay, the double entry will be debit treasury shares credit bank. Yes, this one. So if the company buy it from the open market and have it as a treasury shares, so the transaction will be debit treasury shares credit bank. So later on, okay, when the company wants to sell, if the company wants to sell, then uh, the transaction, the double entry will be you have to credit. Sorry, okay, it's not here. I'm using a different color lah. So it will be credit the treasury shares. Okay, if you want to sell, you will credit the treasury shares and you will get money. So you will debit bank. Okay, if you want to sell. However, if your cost, okay, of selling it, okay, is greater than the treasury shares, so the difference between these two will be recorded either as profit or as loss. So if it is at profit, okay, so you have to credit your OSC, okay, with the difference lah. But if you are selling at a lower, okay, katakan your bank is apa nama, okay, I put it in amount lah, senang katakan treasury shares ni is 50, so you are selling katakan at a greater value, okay, I put it as 50 lah katakan the original value is 50, katakan you sell at 70, so the cost is 50, right? So you have an extra of 20, so 20 ni is kira the profit. Okay, but let's say if you are selling at a lower value, katakan you are selling at 40, so the cost is 50, right? So you have a shortage of 10. So where to record the 10? The 10 ringgit will be recorded on debit side and it will be write off under retained profit or retained earning. Okay, so there are two ways to record based on the transaction. So since you are selling at amount above than its cost, therefore you will have a profit by 8,200 and it will be credited to the ordinary share capital account. Is that clear, class?
Yes, madam.
Okay. Next, the last part is to prepare the statement of financial position. So as usual, refer back to our last discussion. What we need to do is that we need to redo this statement of financial position, but our focus is only the equity and liability section. So we take this original value, okay, and we will amend in accordingly, okay, based on our journal entry just now. So we start with the ordinary share capital. Last time we have 600,000. Okay, this time you have issued your ordinary share at 40,000 unit. That is the reason why the amount has increased to 640,000 units. Okay, as for the value, last time, okay, we have 1,200,000 and then we look up for the adjustment of under OSC. So we can see here, okay, ordinary share capital. So we have to add because on credit side. Another one, this one you have to add also because it's on credit side. And another one, this one you have to add up also because it's on the credit side. So we have to add up all these three value, okay, and it is total up to 1,228,200 ringgit. As for retail profit, the original value is 210,800 ringgit. So you have an adjustment here. Yes, you have an adjustment here, but it is debit side, so you have to minus. Okay, see? So the closing balance is 150,800,000 ringgit. Last but not least, your redeemable preference shares. Okay, last time you have 100,000 units. Since you want to redeem, you want to settle part of it. So 80,000 has been settled up. Therefore, left with you with 20,000 units. And the amount is 180,000. 300,000 minus 120,000. Okay, this one you have to minus. Okay, that's all for question 4, Kasturi Berhad. Do you have any question, class, before we move to Harum Berhad? Class, are you with me? Are you still with me there?
Yes, madam.
Yes, madam.
Okay, so I really hope you are paying attention because this one will be tested in your coming quiz. Okay, the next question is question 5. Harum Berhad, refer to page 25. Okay, again, okay, we cut it short. I hope you have read the question. Let us go straightly to the question. In this question, you just have to
Madam,
write the journal entry. Yes,
ada orang nak masuk.
who is that? Zakia. Okay, Zakia, for information, we already finished discuss on the question 4. So now I am going to discuss for question 5. So please refer to question 5, Harum Berhad. So I will just go to the requirement. We are going to prepare this journal entry, and based from this additional information, uh, can you guess how many transactions that we need to prepare, class? Can anyone guess how many transactions that we need to prepare for the journal entry? Class? Can
Four,
anyone guess?
madam. Four.
Okay, ada yang kata 4,
Three, madam.
ada yang kata 3,
Three.
okay. Now let us go through together. Okay, number 1 and number 2 are actually represent the same transaction, that is redemption of redeemable preference share. So you can see here, this company wants to, okay, this company wants to redeem all of its redeemable preference shares at its current value, and to finance it, the company will issue 70,000 ordinary shares at what, 2.50 ringgit, and yes, that's all, which this type of redemption is not the only way, because the key word here we can see that this redemption is to be said as partly, okay, partly finance the redemption. So we know that we have other portion to finance the redemption. Okay, number three is about the purchase of own shares, okay, where 50,000 shares were repurchased in the open market using treasury shares method. Okay, so that is the second transaction. And the last one is about bonus share, where you are going to give to your existing shareholders using the retained profit, and the basis of the bonus issue was one new share for every 10 shares held at 4 ringgit each. So class, actually there are three transactions. This is what we call share buyback using treasury shares method, and this one is the bonus issue. Now, even the bonus issue is learned in chapter 3, it still can be tested in question for chapter 4, because the company, as I told you, is continuous from the it can be tested in any question, since it is under one roof. Chapter 3 is about company, chapter 4 is about company. So whatever you have learned in chapter 3 and chapter 2 still can be tested in chapter 4, because 2, 3 and 4 is under one roof, under company. So let us go through the solution together. The first one, redemption of preference share. Okay, as usual, you will debit the redeemable preference share. But this time, class, when you want to redeem, okay, you are going to redeem all. Because the question said the company wants to redeem all of the redeemable preference share at its carrying value. So this current liability now, okay, which consists of debenture and redeemable preference shares. So we are going to just concentrate on the redeemable preference share first. Are going to reduce, okay. How much? All. So it's going to be redeemed at its carrying value. Carrying value here refer to the current amount lah, in the statement of financial position. So debit RPSC with 200,000. You are going to redeem all. Credit to redemption of preference shares, and the next step is you make the payment. Okay, bila you dah bayar, you will have to ganti back. So how to ganti? It is said that the company will sell 70,000 ordinary shares at 2 ringgit and 50 cent as the partly financing. Okay, so you are going to sell 8 shares, but you only receive how much? 175,000. Nampak? You are going to sell the shares, but you just receive 175,000. But you know that you have redeemed all amounted to 100,000. So, based on our calculation, is still not enough. Okay, you have uh, issue ordinary share by 175,000. So you still have 25,000. Okay, to top up. So where to get this value? Okay, where to get this value? You are going to take it from the profit. Okay, so the unpaid amount to be taken from the profit. That is why you have to debit retain profit. Okay, debit retain profit 25,000 and credit ordinary share capital. Okay, is that clear so far, class?
Yes, madam.
Okay, treasury shares method. You are going to buy back your shares 50,000 at 3 ringgit. So these ordinary shares, which consists of 250,000, will be bought partly. How much? 50,000. So you akan ambil saham yang ada di pasaran sekarang yang you dah jual to the shareholder, you will buy back. And you are not cancelling it, you takkan cancel dia, you will still keep it in the company, but you rename the shares as treasury shares. That is what it meant. So the transaction will be, okay, debit the treasury shares account. Okay, you transfer the shares, the original OAC to a new account called treasury shares. How much? 50,000 unit times 50 ringgit. So the cost of the treasury shares is 150,000. So what you need to do, you have to pay lah to the shareholder, the one that you bought. You akan bayar pada shareholder yang menjual kepada you tadi. So credit bank. That's it. That is the only journal entry for treasury shares. Very short, very easy. Okay, tapi tadi question number 4 tadi, you already have the treasury shares. You tak beli pun, you already have. So we assume you already bought, but you just want to resell it. But this question, you are actually at the first stage where you will buy and keep it as treasury shares. Okay, understand? I hope you understand that. Okay, the last question is on the bonus issue. So I hope you still remember how to calculate for the bonus share because we have learned in chapter 3. And remember that when you are issuing bonus share, you are not selling it for money. You are giving it for free to your existing shareholder as a substitute for cash dividend. Because if company cannot reward their shareholder in terms of cash dividend, so the other way, the alternative way is by giving share for free, called as bonus share. Okay, so here, this is the shares which has been bought by the existing shareholder, and now you are going to distribute the bonus issue on the basis of 1 for every 10 ordinary shares held. Meaning that for bonus issue, okay, the amount is not given, but you can find it by ourselves. For 10 shares that you have, you will receive a bonus issue of 1 unit. Okay, for 10 shares that you have, you will have a bonus issue of 1 unit. So imagine if you have 250,000 unit of shares, how many of bonus share will be issued? So you just have to divide 10 and times with 1. So this is the calculation. Therefore, you will have about how much a class? 25,000 unit. Is it correct? 25,000 units. You times with 4 ringgit and the amount in value of ringgit is 100,000. So you are going to use your own money. Therefore, the reserve that you will use is the retained profit. So you will take the amount from your retained profit to subsidize the bonus issue. So debit retained profit with 100,000, credit bonus issue, and debit bonus issue to transfer the shares or to allot the shares in the ordinary share capital. So class, that's all for question 5. You just have to prepare the journal entry. You don't have to prepare the statement of financial position. So I think chapter 4 is quite easy compared to chapter 3. If you understand well the ground of chapter 3, inshallah you can do well in chapter 4. So that's all for chapter 4. We are finished. Alhamdulillah. So you are ready to take the first quiz. quiz on the early of June. I'm going to stop this recording. Okay.